Hey guys, we're going to be starting here in about a minute. And right now, you should be able to hear me. um, and we're testing that sound right now. So you caught us at a perfect time. All right, awesome. Okay. So I put that thing up there. I'm talking now, and you should be able to hear me because a lot of times some people have their sound settings wrong. So let me just alert them. Okay, good. I'm glad you can hear me perfectly. All right. So let's get started here. Today we're going to be talking about, actually, I have about 1 minute to go. I don't want anybody to miss it here. But this session is being recorded, and you all are going to get the replay on this too and the slides. Okay. So no worries there. Okay, so we're going to be talking about, and this is really primarily Ike's thing, right? He's the expert in Elliott wave theory, and I'm just riding along for the. I'm here for the ride here. Him and I trade together, and we thought it would be great to share this webinar, free webinar, and talk about Elliott wave theory. Okay, and so let's get started here. Okay. So just want to make sure that you stick with us in the end. We have a special bonus for you guys and wouldn't want you to miss out on that. Okay. Just a little bit too of housekeeping here. What I'd encourage you to do is really turn off the distractions. We're going to be talking about, Ike's going to be talking about some specific things that you want to pay attention to. And as traders, right, we all want to have an edge. And I can guarantee you that the knowledge that he'll share here will give you an edge in trading. Okay, so what I would also recommend is that you hold your questions until the end, and I promise you that we will answer every single one of your questions. All right, we just want to make sure that we get through all the material and you guys can absorb it. And what I would encourage you to do is write down any questions that you have, and then post them, and we will answer those questions. All right. Okay. So let's start out with why you're here. Okay. So I put down 3 reasons why you may be here. Right. And the number one thing that I thought of is that you're interested in learning new strategies that'll take your trading performance to the next level so that you can finally leave your 9-to-5 career behind. That's number one. Number 2 is you've heard, seen, read about others making money trading, and you know you can do it too. You're just not seeing your account grow fast enough based on your goals. And number 3, you've tried different trading strategies and thought, okay, this is it, only to discover that you're not getting to the place of consistent results, right? So if you can just show me a quick show of hands on the chat here, which one you're most, in for, either 1, 2, or 3, that would be great. Okay, all the above, all 3. Okay, awesome. Yeah, I've been in that camp many times. 1 and 3, perfect, John. Thanks, Keith. 3, good. Okay, perfect. Okay, so that's all the housekeeping. I'm glad you're here and awake. And with this, I'm going to turn it over to you, Ike. Are you ready?
Yep. Can you hear me, Al?
I can.
Okay, I'm going to start sharing my screen right now.
Okay.
Let's see here. I'm going to go to present. And there we go. So let me preface this presentation on Elliott wave theory. I
don't see you presenting yet.
Okay. Hold on here.
Okay.
Bear with me, guys. Get it up.
Hey, Ike, if you can, I can share for you.
Yeah, I've got it right here.
You got it? Okay.
Yeah. Sorry about that. I'm new at this, if you can't tell. Okay, presenter. Okay, there you guys see it?
Not yet.
No?
Not yet.
Okay, I'll try one more time here. Okay.
Nope.
Nope.
All right. Let me share,
Okay.
and then you just coax me here. All right.
Okay, let me preface this little presentation. I don't expect, or should you expect, anybody to become a expert in Elliott waves today. So what I'm going to try and do is just give you a brief presentation on the history of Elliott waves, and then take you down through the basic principles of Elliott wave. And we'll show you some different setups and different impulses and corrections and things like that. So with that in mind, let's just take a look at the history of the Elliott wave principle. So this has been around since the 1930s, so certainly something that's not new. And a lot of people use this to trade. A lot of professional traders use it, and a lot of the algos trade on it. So it has a lot of functions. So one thing you have to think about is if everybody, or not everybody, if a lot of people are using it, then a lot of trades take place in the different zones and areas. It's like anything else. You've got to pick what kind of trader you are and what kind of technical analysis that you want to use and what meets your eye and what you're comfortable with. And I'm probably like everybody else in the world. I retired, believe it or not, back in 2002, and I just bumped around and tried to find something that worked for me. And finally, about 10 years ago, I said, look, I'm going to learn how to be an Elliott wave trader, Fibonacci trader, and I'm going to really stick with this. And that's what I've done for the last 10 years. And there's a lot of books and material that has been written about Elliott wave. It's all over the internet, and you can Google it. And if you want to become more of an expert, you can look there. So let's take a look at how this has evolved over the years. And it's named after a fellow, Ralph Elliott, and he started this theory trading this way back in the 30s. So that's a long time ago. So what he thought, and he's right, Elliott waves markets generally behave in a random and chaotic manner, but they don't. They move in repetitive patterns, and I've got that underlined on there, and it's a fact. And it's because of investor psychology. And what happens is, once you understand or try to understand these recurring fractals or patterns or waves in financial markets, you'll get the gist of what Elliott waves are. And it's not a whole lot different than from the Dow theory, which also trades in waves or fractals. So with that in mind, let's go down to the next slide, Al. Oh, one more down. There you go. No, one more down.
That one.
Okay. So I'm kind of an engineering guy, so I like the fact that these fractals are mathematical structures. And once you get the larger trend in mind, you can drill down and get even smaller fractals. So, and all these things happen over and over and over again. So let's take a look at some of these fractals. Let's take a look at the trend fractal or the impulse wave, and then we'll take a look at the corrective wave, which trades in the opposite direction of the trend. So next slide, Al. So this is a fractal or an impulsive wave right here, in which you can see all these impulsive waves have 5 sections. You have the first degree up, which is wave 1. You have a correction, which is wave 2. Then the longest, or the most often the longest wave, is the wave 3. And this is the one that you want to be in. This is the one you live to get into. And then you have this pullback to wave 4, and then you have this last wave up, which is wave 5. And to the right, you can see an example, a real live chart of what one of these things looks like. So they always divide in 5 waves. The rules are it always divides in 5 waves. Wave 2 never pulls back below wave 1. Wave 4 never closes it into the territory of wave 1 unless it's a diagonal, and we'll leave that for another time. Wave 3 is never the shortest wave. It can be equal to a 1 or 5, but it's never the shortest wave. Waves 2 and 4, you can see on the little diagram here, if wave 2 is an ABC correction or a zigzag or an ABCD, typically wave 4 will be a different type of corrections. So also, and we won't get into that today, but these subwaves also exhibit Fibonacci relationships. For example, wave 2, a lot of times will always retrace to 50% or 61.8% of wave 1. Wave 3, a lot of times, will be an extension of 162% of wave 1. So we put those on the chart and we have a good idea where these waves are going to end. We know that wave 4 most of the time is 38% to 50% of wave 2, etc. So those Fibonacci relationships, excuse me, are key to the understanding of Elliott wave. But that's what we learn and that's what we teach on how to trade these things in the room. Okay, Al, next slide. Okay, so the corrections, if you remember the first chart there, the corrections were in wave 2 and wave 4. And there's several types of corrections, and we certainly can't go over all the corrections today, but we'll take a look at a couple of them and show you what they look like. Okay, Al, next slide. Okay, so if you remember, we had the 1, and let's say this is a wave 2 pullback right here. All corrections, as a rule, are 3 sections back. Let's say the trend was going up this way, up to the left of the chart. Then we had this A wave down and this little B wave up. Remember, 50 to 61.8% pullback, and then this last C wave down. And these are tradable. So that's one thing. One of the things we learned is how to trade these corrections. Okay, Al. Okay, this is that same 3-wave corrections, but you can see, and as I mentioned earlier, all these waves are fractals. This is the A wave down on the previous chart. You can see 1, 2, 3, 4, 5. And here's the B wave. And that B wave is trading in the direction of the trend. And then we have this final C wave down, which we try to buy this correction long then. So 5 waves down for the A, ABC up for the B wave, and then 5 waves down for the C wave. And this is what we want to trade right here, because let's say the bottom of this impulse started, and we did this correction back down to 50% of the initial start of the trend, then we'd be in the 3rd wave, is what the Santa Claus wave. So that's what we want to do there. And this is one thing we teach you how to do, is trade corrections. So next, Al. Okay, let's look at this correction. One of the most common corrections, and you can make a living. I promise you, you can make a living on learning how to trade an ABC correction. So the wave sequence is just what we showed you in the other wave. You can see the A wave here, B wave 50% up or 62% up of the beginning of A wave, and then the C wave down right here is typically 1.27% extension or 1.61.8 extension right here. And over to the right is a live example of an ABC correction. And the way that we would enter this, we teach you how to use triggers to get into this trade here once it starts back up, to minimize our capital at risk, and to have a great trade going up and catch that 3rd wave or either the 5th wave off a 4th wave. These ABC corrections most often happen in a wave 2 correction. So Al, let's take a look at the next one. Okay, same deal. These waves, this is called a regular flat. You can see it's a three-wave move down, A, B, C. So what's the difference between this and a zigzag? So one main difference is, if you remember on the ABC, it was a five-wave move down, and you can see here, this is three waves moves. Another ABC, have an ABC up, and then the last fractal down for the C wave is five waves. So it's 3, 3, and 5. So the B wave tends to retrace at or near the start of the A wave. Okay. And these occur most commonly not in the second wave, but the fourth wave. Now remember, if wave 2 was a ABC, something like this is more prone to happen in the fourth wave. And we can also measure the relationship of A and C right here. So typically, the conclusion of this C wave is 100% of A measured from the top of B, or 162% measured from the top of B. So you can envision this as a regular, they call it a regular flat correction. So let's look at the next type of flat. Okay, this is a running flat. And you can see here, the same deal here. It's a 3, 3 down, 3 up, and 5 down. And these also occur mostly in the fourth wave. And this signals a strong underlying trend in the same degree of the correction. So if we're an impulsive wave up right here, this is going to be a strong correction to get into to trade the next leg up. So its common relationship is a 100% between A and B right here. So you can see this ends typically down here where the A wave started, way A wave ended, excuse me. Let's take a look at the next one, Al. Okay, this is an expanded flat, and you can see how this drops a lot lower than wave A right here, but also wave B is higher than wave A. So if you remember on the typical ABC correction, we had this A wave down and B wave retraced to the 50 to 61.8% and dropped down below A wave. In this correction, this B wave is a good bit above A before it drops down to C. And these also occur most commonly in wave 4s. So those are, it's just a brief introduction into Elliott waves. And the way we use these over in the SOS channel is we have a separate live ES chart room going every day. And we put up a 15-minute, a 5-minute chart. And these charts are updated live as the day goes by. And explanations are given on where we are on these charts, what type of correction we're in, or where we are on the impulse waves. And it's a great way to scalp futures. And we have a room every day open from 9:30 until close. And these are updated. The counts are updated every day. And we also do educational series over there, brief educational series from the basics to teach everybody how to trade Elliott wave, and we teach them about the Fibonacci's and all that good stuff. So if you're interested in that type of stuff and want to learn how to trade futures using this, come on over and we'll be glad to have you. So Al, that's all I have.
Okay, thanks, Ike. These are technical patterns, as Ike mentioned, and I use them in my swing trading. And so with Ike, he trades shorter term trades, and I trade trades that typically last from an hour or two to 2 or 3 days. And so they work because I mostly use ABCD patterns, as Ike mentioned, and mostly going long. Okay. Just because the market typically goes long for most of the time. So here's my performance this year using micro futures. So I'm not using minis, right? I'm using the micro futures, and it is a great place to actually enter as a retail trader, because the margin requirements for trading S&P 500 futures and NASDAQ futures, all you need is $50 per contract. And obviously wouldn't recommend you trading with such a small account, But if you put in $300, $400 account, you can trade micro futures and actually practice these trading practices that Ike alluded to, and it builds up. It builds up really quickly. And these are just swing trades that I've done just this year. Okay, and they're very, very small. Now, in the room also, I just wanted to mention that we have another trader that trades candlestick pattern indicators, right, that he developed. And we're lucky to, Ted has just joined us, okay, and we're just starting with him. And I've actually been working with him for about a year now, watching him do his thing, okay, and he's a day trader, and this is what he does for a living. And the same type of room that Ike alluded to, basically Ted trades these types of very, very short-term trades, or you can even call them scalps, based on the settings, the automated settings that he has, and he does really, really well, actually. We've had him on live for about 2 or 3 weeks now, and I don't even think that we've had a loss for a day in these by these indicators. But anyway, I just wanted to share that with you. So one thing another thing I wanted to walk you through is some of the services that we offer. Okay, and just hang in there with me, and I'll walk you through this pretty quickly. Okay, so trading is really about mindset. Okay, so let's imagine what it would feel like. So if most of your trades were winners month after month, and it would be confirmed by watching the size of your account grow at the same time. All right. You need edge. You need an edge to do that. You need education. You need an environment that you can succeed in. Okay. Number 2 is becoming the trader that no longer takes large losses, but consistently trades according to a proven trade plan that is profitable over time, allowing you to grow your account month over month. That's the goal, right? I mean, that's the goal of any trader. Okay. And so the question is, would you like to follow our trades using the same strategies? It's not only 3 strategies. We have a few more, right? Outline and become a profitable trader. You talked about while you're here, right? Interested in learning new strategies. Maybe you're not seeing your account grow, or you haven't found the right strategy. Well, I can tell you that we do have, succinct strategies that you can follow. And, Ike is a very, very mechanical trader, right? He uses triggers and, specific areas by which he's going to enter a trade and exit the trade. And those are all communicated, when we're trading. Okay. So it's very, very clear. Not only that, we really created an environment of learning. And so not only do we have the trade alert service, but we also have an education area that we put content in constantly, and live trading rooms so that you can learn how to do this on your own as well. So my goal is that when we bring people in, we want to make them independent traders, all right, and really cut the learning curve. So the question is, will you keep doing what you're doing and hope that one day something will stick, or will you finally take the steps that will get you to the place that works over and over and over again? And so it's not only learning, training, instruction, and practice that leads to success, but it's also discipline, commitment, having an edge or multiple edges, and a no quit attitude, right? As a trader, I can tell you that I went through years of losses, and I never quit. And I knew that one day that I would hit it, right? And it's a matter of finding the right strategies with the right environment, the right practice and experience to get you to that place. It's just like any other career, okay? But you can make it. If I made it, you can make it, all right? So our trade alerts, we do provide trade alerts in futures, and now 3 different types of future trades that we do. The alerts come, some of them are in our options trades, because I trade SPX, credit spreads, 0 DTE, 7 DTE, and 30-day. They come directly from my account, and they're posted and they're integrated with Telegram. So you get those very, very accurate alerts constantly, daily, right? We probably put out about 35 to 50 trade alerts a month between the futures trades, the SPX trades, and a lot of the option trades that Ike does as well. Calendar spreads and diagonals. Really, really proficient trader. We have chat groups, right? That's two-way communication, and then our channels, which is really one-way communication, and that's where the trade alerts are. So there's no chatter in those rooms, to make it very, very clear. And Ike and I really work hard to find the right trades that'll be easy, simple to follow, and profitable, obviously, right? And it's not always easy to find those things, but that's what we do. This is our full-time job, and you guys can benefit from this at a very low cost compared to what you'll make in a day. All right. Quick success stories, and I have many, many more. I worked with Matt for many years in the IT industry, and he uses our monthly trades and trades them very, very proficiently. He loves the trade. Luke has been with us for over a year now, and really loves the service, and he just makes money every single month. Emmy just joined us recently, and really loves the environment and the program that we have, just because it really is comprehensive, and that's really what we set out to do when we formed this group. And then Dwight's not with us anymore, but he was a 0 DTE trader. Loved the trade, just because there was no overnight risk, and was with us for over a year, and just loved the service. And he learned, what he wanted to learn, and moved on, right? And that's what happens to a lot of people. So yes, it is a subscription service, but you guys can cancel at any time. And one thing I want to give you is my guarantee. Okay, so if you subscribe to our service and lose money in that month, I will refund your subscription plus 25%. And guess what? I've been doing this for over 2 years, and I have never, ever had to pay back someone because they lost money in the first month. So what does that mean? That means we're making money every single month, guys. All right. So again, imagine what it would feel like, right, for you to make money every single month for a small cost, and this happens consistently over and over again. And not only that, you're not just randomly taking these trade signals, you're actually learning, because we explain why we put out the signals, when we put them out, and walk you through the process so you can become your own proficient trader. Okay. So here are the costs, of it. There's 3 different packages. One is just the monthly trade. Second is the day trader, which we have the most amount of trades in that group. And then the third one is the full-time traders, and that includes the live rooms and the futures trades as well. Okay, so let me put this up here. Stock picks. Don't think that's the right offer. Okay, so let's see here. Okay. All right, so here's the actual prices. Let me look at the offer here. Second. Yes. Okay. Here you go. There's the offer. Sorry about that. Okay, so the bonus that I wanted to share with you is if you join our wait list, right? Because right now we're not open, and let me explain why we're not open. The reason that we open only 4 times a year is because our focus, we want to make our focus to our traders, right? To our subscribers. During that period of time that people come in, if we have it open all the time, basically people will come in consistently, and we're having to explain things over and over again to the same, to different groups of people as they come in. So what we found is that if we close the service, we're able to focus on the newcomers that come in, answer all their questions, and it takes about a week or week and a half. and then we go right back to putting focus on our traders and helping them achieve the results that they expect. Okay. And so that's why we have a wait list. And so during the wait list, you are going to get some content, right? And gives you information about our trading systems and what we have to offer, and actual some instructions as well. And then you'll be able to join for the discount price that I'm showing here. Okay. So you'll get $20 off per month for life, right? If you're able, if you join the wait list, and there's no obligation on the wait list, it doesn't cost you anything, and you can decide not to come or to come when we do open the service. All right. Okay. In addition to that, I do have a credit spread trading course that I offer, and the value of it is around $400. And I used to actually mentor traders one-on-one, just for my options trade, not for futures trades, because I wasn't trading futures at that time. But I would charge them, it was a 2-month program, and I would charge them $800, right? Well, that got overwhelming for me. And then I started group coaching, which I charged $400 for the training. That got overwhelming. And eventually I actually created a course for the SPX trades. The regular price is $149. When you go through the offer, you'll actually get a bonus off for $129. And that gets you prepared for a lot of the trades we do. I am working on a futures course, and working on it eventually with Ike, and we're gonna create that one too. But for now, we do have options trading, and it's a great course. And I've had over, I think, 600 people take this course, and nothing but good reviews on it. So the question is, if this is for you, do you want to learn a step-by-step process to gain income in a market that goes up and down? The futures and options trades that we do are just exactly for that. Okay. You want to finally break the barriers on the series of losses and account drains, and you want to earn consistent income that sets you apart from other traders. This is it, guys. Again, my guarantee is that you will make money month after month after month. Okay. So again, you get $20 off if you subscribe by joining the wait list. And by the way, we do open the first week of August. Okay, so it is right around the corner. Seems like a long time, but it's not. It comes pretty quick. We've got actual professional traders that trade for a living in our group. The 3 of us, this is what we do. Okay, we don't have other jobs that we do. We focus in the trade alerts, and provide training to the people that come with us. All right. You get automated signals. Some are automated, some are not, but they're all clear. Okay, because we really do separate the chat rooms and the channels to make sure that everything comes in very, very clear, no ambiguity. The trade entry and fill price, the price target after the fill, and my guarantee. Right, it's a winning combination. Okay. So covered that. I said it would be quick, and shared the bonus with you, and just want to see if you have any questions here. Let's see here. Okay. Okay. Looks like the slides are not in sync. Oh, sorry about that. Okay. So question is, in the 5-minute chart possible? Absolutely. Trade. You can trade in the 5-minute chart. In fact, I know trades using 5-minute and 15-minute, and so does Ted. Ted actually just predominantly uses 5-minute charts. The triggers. Ike, you want to talk a little bit about the triggers that you use? Ike, you there? You're on mute?
Yes, I'm here.
Okay. All right.
Yeah, sure. What we do over in the ES Live room is, as I mentioned, guys, these charts are updated as the day progresses. So what we're doing over there is we're putting up the pivots on the chart, and we're looking at some momentum oscillators on the higher time frame charts. And if we see something that has a trigger sitting up, what we'll do is we'll set up a pivot, And then if we're trading on a 5-minute chart, we'll drop down to a 3-minute or a 1-minute chart. And what we use is 834 EMA crosses to trigger into the trade. If we go up a time frame, we'll drop down to just a little bit lower time frame. For example, if we're trading on a 30-minute, we'll drop down to a 5 and use those EMA crosses. And the stops are pretty obvious when we look at these trades. So that's what we try to do. And as the day progresses, we'll explain the setups. There's basically 2 setups we do. We will either do a momentum setup or we'll do a pullback setup, which is my favorite, which is a retrace, and then we'll get into the trade when we get the trigger. So we try to really explain, and we try to teach the principles in live life. And you read a lot of books and things, you're looking at charts that are 5 years old. These charts are completely current, completely transparent. What we want is for people to learn how to do this. And if you stick with it, I guarantee you will learn how to do this.
Thanks, Ike. I can see you're answering questions there. I didn't realize that. So thanks. Maximo, you've been waiting since the 24th. That's really right when we closed the last service. So you've been waiting probably the longest. I apologize for that, but we are opening at the first week of August again. Hey, Patrick, thanks for the plug there. So appreciate that. The credit spread course is the best program to help you understand what they are and how to trade them. Great. Okay. All right. Any other questions? You mentioned RMT. How would I access that? RMT. I'm not sure what that is. Tom, I'm not sure what that is. Can you elaborate on that question? Okay. Oh, reverse. Oh, gotcha. Yes. That is the candlestick patterns that Ted is trading. I didn't get the acronym there, but that's the. So he has a chat room as well, or a live room that he trades his indicator in as well. The hours of the live classroom, I think it varies for Ike, but usually Ted starts around 8:30 and he goes pretty much throughout the day there. So again, this is all he does. You know, he trades for a living and he's with us for most of the time. Okay, and you got the chart room there. Ike, appreciate it. Okay. Any other questions, guys? Any other questions that we can help with? All right. I hope this was of value to you. And again, you guys are going to get the replay for it. And if you have any questions at all, just email me. And if the question's for Ike, I'll get it to Ike, and we'll go from there. All right, guys. Thanks. Appreciate your time, and hope that you found